The CEO and Managing Director of LPI, Cristóbal García-Huidobro, who's based in Santiago, leads our team in Chile there, would like me to pass on his apologies. He was scheduled to present today, but due to a close family bereavement he suffered last weekend, he obviously couldn't travel, so he's asked me to step in and present on his behalf, so hopefully I can do his presentation justice. So LPI at a glance, we're a pure play lithium developer and explorer. Diversified in terms of, half of our assets are hard rock based in Western Australia, where we own 100% of a number of tenements in the Pilbara area close to Pilgangoora, and a large number of tenements in the Greenbushes area. These are relatively early exploration tenements, but we think they're highly prospective, and we've just acquired some additional tenements in the Eastern Goldfields and also around Greenbushes, and we're actually in the process, we've announced a demerger of those assets into a spin-out company, Western Lithium, which will be out in the market in the final quarter of this year, which we will have a new board, a new management team, which will give renewed focus to these assets, which we think will be a great benefit to our shareholders. However, our primary project is the Maricunga brine project in Chile, and we own 51% of this asset, and there's two other shareholders, a private Chilean individual and a junior sort of Canadian company. But we have just announced about a month ago a consolidation of those three shareholders, LPI and those two other shareholders, such that LPI will be the consolidating entity and will, by the end of this quarter, subject to shareholder approval, own 100% of this exciting development asset. So I'm going to focus on the Maricunga project, which we think is the most advanced brine development project in South America. There's a busy slide here, but in terms of the top left slide, you can see that typically greenfield mining development projects take from 10 to 15 years from exploration through to production. And I'm really pleased to say that we're in the final stretch of that timeline. We've been working here extensively since 2012, drilling production wells and test bores to define a resource. We've achieved our environmental permit, which is no mean feat in Chile on a greenfields project. We've conducted 2 feasibility studies, the most recent of which was announced to the market in January this year. We've taken lots of samples for pilot testing and for off-taker qualification, and all of that has confirmed an outstanding project. So we're in the final phases now of arranging finance for development of this project, and we hope to be in construction very soon. In terms of the economics, it's an outstanding project. As I said, it's very high grade relative to other development companies and projects in the lithium triangle, over 1,000 ppm LiO2. We are planning a 15,000 to 16,000 tonne per annum of LCE production for 20 years on our stage 1 project, and we can build that for just over $600 million. Just on that, I had someone come to me yesterday morning and say, well, I thought your capital looked a little bit high. And then an hour later, someone came to me and said, well, I actually think your capital is a little bit low. I'd like to think we're in that sort of Goldilocks just right spot. And I think that's justified by the recent work we've done with Worley Parsons and our high quality consultants who have completed the feasibility work for us. We've been testing the capital in terms of this inflationary environment in recent months, and we're still well within our contingency levels. The project has a very low operating cost, and that's without taking into consideration potassium chloride byproduct credits that could add to our margins. And we generate on a 100% basis an outstanding after-tax NPV of $1.4 billion US. So think about the current market cap of LPI, 150 million Aussie, 160 million Aussie as of yesterday. On a 100% basis, that might equate to less than $300 million US. So trading at sort of 0.2 times NAV or NPV. With my sort of fund manager hat on, I look at projects like that, which are substantially de-risked, permitted, ready for finance and construction, and I think that is a fantastic investment opportunity. I think there's clearly a 4 times multiple to be made if you sort of back LPI now and take it through to production. That's a 4x for the Queenslanders in the room. And We'll have a pretty rapid payback, and an amazing IRR of nearly 45%. So a really strong project, close to production, de-risked. It's the most advanced, the only permitted new development project in the Lithium Triangle, as I said. So in terms of project financing, we are well advanced with an MOU with Mitsui. However, we're obviously sourcing other alternatives in case that doesn't eventuate to the commercial deal that we want. But Mitsui are a fantastic partner, and they've been working with us for many months now. They've taken lots of brine samples. They've been conducting a huge amount of due diligence, and they're looking for 100% offtake in exchange for an equity and debt participation in the project. So they'd be an amazing partner for us. However, they're not our only option. As you can imagine, every investment bank in the world has a client who is interested in participating in this project, and we're sort of fending them off or inviting them in, depending on your point of view. We're sort of, obviously trying to put together the best outcome for our stakeholders and shareholders. We've got a great sustainable project, very proud of the ESG credentials. We've got low CO2 emissions. We generate a high quality product, low water usage, and an exceptional sort of profile. I'll talk about the indigenous community relationships in a second. In terms of the mineral resources, a lot of this material is obviously published in our DFS, and you can access that through our presentations or on the website with the feasibility study. But it's a very large resource, currently sort of over 3 million tonnes of LCE, with the potential for another 1.2 to 2.1 exploration target to add on to that. That's sort of in a combination down to sort of 400 metres vertical depth, and we know that the brines continue way beyond that. So a very large resource, and as I say, stage one just really focuses on the first 1 million tonnes reserve. We think, as I've mentioned, this has unrivaled quality. Tier 1 companies have done the work. We're very happy with the economics. The Mitsui Strategic Alliance, it's a staged approach. Stage 2 could potentially double production, and obviously Mitsui and other partners are looking for that sort of scalable size of project. We generate a high purity battery grade product. Probably 90% or more of our production will be battery grade, high purity, and that's been tested by off-takers. We're fully permitted, as I said, and we have excellent local indigenous relationships. So everyone talks about ESG, and I think we wouldn't have got our project permitted from an environmental perspective without the best-in-class environmental credentials. However, I think our team in Chile is most proud of our indigenous stakeholder relationships in Chile. We think we set a new standard for involvement, participation, and I guess transparency and involvement with our local communities. And we think that the local community, the Chilean government, other stakeholders, our shareholders will be really proud of the legacy that we're going to leave with the development of this project. Briefly, in terms of Western Australia, I've mentioned that where we're looking for our spodumene hard rock projects there. As I say, relatively early stage. We've announced the spin out of Western Lithium, and that dedicated team will rapidly accelerate the exploration activities in all of those tenements. Very excited by the new projects that we've added to our Greenbushes portfolio. In terms of corporate snapshot, I mentioned the sort of consolidation. I think that's a key thing to mention. We've got 350 million shares on issue now, where we own 51% of the Maricunga. We've done a great deal for our shareholders by acquiring the other 49% of the asset that we didn't control for only a 42% dilution. So, we will consolidate that, and I think the market hasn't really grasped the implications of that. 100% of that asset, based on where it's at now in terms of its development timeline, I think makes the financing a whole lot easier. It makes the decision-making and attractiveness for recruitment a lot better. And I think importantly, it gives us a lot more sort of corporate appeal for other sort of potential companies to participate in some way. So we're really sort of excited by that consolidation. It's been hard work over the last few months, and shareholders have been pretty patient to put up with that, but there's a reason why three-way mergers don't happen too often. So we're we've got a bit of cash. We'll close that consolidation by the end of September, and then we'll advance the projects. So I think that's probably all I have to say, really. Thanks for your time.